So venture capital in the US-India corridor, I knew that we were going to do this panel about 10 years ago. And so I named my firm at that time Indus Age, which is called India US Age. Get it? So I did that 10 years ago with the foresight that we were going to do this panel. Just kidding. Regardless, so I run a VC firm, and I'm active in the US-India corridor, as most of these people are, in various capacities. Sandesh runs Premiji Invest, and he's been very active in the US, and now more recently he started looking at India. And Asha needs no introduction. She is prolific in her angel investments. And Jishnu has had a firm called Nexus Venture Partners, who has been very active in the Indian ecosystem. And Ami is very focused on IP and intellectual property and working with the universities and the academic institutions. So I think you get a sense of the type of questions and topics I think we should be talking about. But before we do that, I just wanted to ground ourselves on some data. So the aggregate deal values since 2009, so this is statistics, so take it with a pinch of salt, is $109 billion. This is India-specific aggregate deal values in total since 2009. And the total capital raise in the last couple of years is about $25 billion. And the AUM of the venture firms that manage this capital is roughly about $28 billion. There are about 125 firms in India, primarily VC. 64% of the firms that operate in India in the category of VC PE, predominantly most of them are VC. So as you can imagine, there's a lot of excitement in the Indian context. And we as a firm, Celesta, we invest a lot. And Arun is here. Arun runs our India practice as well. But there are lots of issues that we all grapple with. And just to frame this conversation, I wrote down a couple of things. So the first thing is clearly what Gurucharan Das brought up in the last panel regarding governance and transparency. So that's clearly one particularly significant issue that most investors think about, not necessarily with the critical eye of what is lacking or what's not working in India, but it's really a reference point because everybody knows what to expect in an unregulated environment like the US. If you're in VC industry, it's fairly unregulated, and private companies can do whatever they want, and that's not the case in India, and we can touch on that. And in that same token, there's a set of new initiatives from a regulatory standpoint that's happening in India, which is super exciting. The notion that you could have on the ground a capital markets environment, much like what you have at DIFC in Dubai or ADGM in Abu Dhabi, with Gift City. I think it's one of the most highly impressive sort of initiative that the Indian government has taken on. And there are some issues surrounding that. So I'd like to sort of get the panelists' point of view regarding that. The second key sort of cluster of comments I would like to elicit is related to deep tech versus sort of the traditional software, SaaS services. And as I'm sure you've seen today, the Indian government made an approval of about $15 billion for new semiconductor fabs. The last budget, Nirmala Sitharaman, the minister, announced an approval of about 1 lakh crores, $12, $13 billion for innovation and startups. So there's a clear thrust on the part of the Indian government, and as Amitabh so eloquently talked about, India is not just the back office of the firms in the US. It is really taking very strong strides towards innovation and creating the entrepreneurial environment and providing the incentives for that. Is that really the case? I mean, these are people that actually look at, Jishnu and Sandesh and others are actively involved in looking at the Indian market through that lens. Is that the perception that we have, that the Indian government's efforts are indeed going to be resulting in, the intended effect? So broadly, these are the sort of the clusters I'd like to have this panel discuss. But before we actually get into the specifics of it, since Pranjal actually did a very good job of involving the audience, I'm going to do something even more, which is to really have a shout out from the audience, just one word aloud, to shout out on the context of what I've just articulated. What are the areas that you would like to hear the panelists emphasize more on? Just one word, just shout out.
AI.
AI, okay, that's one.
Development sector.
Development sector and social sector, okay.
Climate tech.
Climate tech.
Education.
Education. Anything else? One last one.
Humanoid robots.
Sorry?
Humanoid robots.
Humanoid, okay, I'll classify that under the AI thing. Health, okay. All right, that's good. So, in the spirit of trying to make this thing more converged and having a more interesting dialogue, I'll request the panelists to sort of keep these points in mind as you make your comments. So why don't I actually start with Jishnu, who's been very active as a cross-border investor in India, and you perhaps have had the most prolific activity in the US-India market. So why don't you sort of highlight some of the differences that you see in the context of what we've just talked about?
Sure, thanks, Sriram. So just for brief context, Nexus Venture Partners, we have been investing in US and India for last 16 and a half years, manage about 2.6 billion AUM. And from day one, we have taken this approach of one integrated firm between US and India, investing in what we say, two broad categories. One is digitization of the Indian economy for the domestic market in India, and the other is enterprise technology companies leveraging India for the global market, which happens to be primarily US. And so with that lens, we started, just to set some perspectives, like when we started at that time, I would say India's e-commerce was probably in few hundred million GMV back in 2007, 2008 circa, which has gone to almost like $100 billion of online goods purchase. When we started, India was predominantly cash economy. Now probably the transaction volume that's happening in India is well over $1 trillion. And all these things happened based on the digital public infrastructure, which has been built around payments, around digital identity, around mobile data infrastructure, which is unheard of and absolutely leapfrogged compared to US economy. So the difference, coming back to US and India, the opportunities that we see, India is still, I would say, a country of like core needs that is being digitized, and that is being digitized in a way which we don't see or we don't think about in US, completely leapfrogged. On the other hand, in US, it's more like opportunities of, we call it aspiration and wants, where like, okay, basics are done. It's not about, roti, kapra, or makan. Like, it's not just about housing, clothing, and goods and all that. It's about what next. In India, the fabric of the economy is actually getting rethought and redesigned, and it's just amazing, how, where the country is going. Last 10 years, we feel, has been the foundation. 10 years, next 10 years would be the era of scaling in India on the back of digital economy.
So Jishnu, I think just to get a finer point on this, you're on multiple boards in the US, you're on multiple boards in India. Can you sort of highlight one or two differences in the way these startups think about go-to-market, the way they think about investing, for product market fit? Do you see any difference regardless of sectors?
Yeah, so good question. So one thing we have to keep in mind, obviously in India, in US startup ecosystem has developed over 50, 60 years. There is a lot of maturity, there is a lot of best practices, there is a lot of returning entrepreneurs who have set the stage of how things should be done. And I think in general, more so being in Silicon Valley, maybe than some of the other parts of US, the learning, there are some inherent ways of how one should conduct a board meeting, how one should, manage shareholders and all that. We have to keep in mind in India, everything is happening over the last 12 years. Like, when we started back in 2007, 2008, nothing was happening. There was not this concept of VC-funded startups. Now we are seeing many, many IPOs over the last 5 years in the Indian ecosystem where venture-backed companies are going public. So there is there has been teething issues, and of course, all of us, I know, like, we talk about Byju's because that's what media talks about. There are fantastically run companies which are out there because we are handling probably 100 plus of them. I think as board members and as venture investors, we share a lot of responsibilities in terms of how we guide the entrepreneur. Sometimes we might be like, in a bull market we are sitting, we might be just telling them, growth at all cost. And that sometimes puts in certain, you call it pressure or overburden of expectations, which might lead people to do certain unnatural things. But overall, if you look at, I think the ecosystem is definitely going in the right direction, where newer companies care for right governance. Newer companies care for doing the right thing for the shareholders, and, putting in processes in place. So yeah, it's maybe like, as we go along, we can share more nuances.
So I think I want to come back to this point, but I think I'm going to switch to Sandesh. You're obviously very prolific in later stage investing and growth investing in the US. And in the tech area, there's not that many opportunities for growth in India. There's lots of early stage opportunities. In fact, I saw a report that said that if you took away the Flipkart exit out of the equation over the last 2-3 years, the Indian environment in the VC space has not returned capital in aggregate. So, it's disproportionate in terms of the overall IRR for the sector, but you have to really think about where can you really deploy. So your strategy in the US is to go do growth. Are you trying to employ the same strategy in India, or are you trying to look at earlier stage in India?
So I think maybe I'll address it in two ways. Look, we are a captive fund to an endowment, right? So we have a pretty broad sort of swath of things that we do. If we go back and look at the last 15 years, and I look at the portfolio that we've built, India is largely consumer and financial services on the growth side, and US is largely life sciences and tech. And so India is sort of more of a reflection of an emerging and growing economy, US for, constant change. And when I think about tech or more enterprise software, more specifically, this is sort of a mental model that we've been developing and using, and I'll try to explain it in some fashion, and so let's see if we can answer the question using this framework. If you think about end markets in, say, a more developed economy, whether it's Europe or North America, you think of more of a balanced equilateral triangle, right? You have a high end of the market, you have sort of a mid end of the market, and then you have sort of low end or SMB, how you want to qualify it. The same thing applies to the quality of talent, right? So if you think about engineers, maybe managers and directors, and say CTOs or people who can really go deep on different activities. So it's really a balanced sort of pyramid. And you take that framework and you apply it to India, and if you see that, what you'll see is a very, very wide and shallow pyramid, right? So if you think about the size of the market, and if just for use of parlance, if it's at $10, the market's large and huge, and you move it by $2, the market shrinks rapidly. You move it by $10, there is hardly a market, right? So it's a very, very shallow pyramid. And that applies to even the kind of people and talent we see. Lots and lots of really good engineers at the first level. You start moving up that chain and you go, I want to hire some very high quality senior managers. It shrinks very rapidly. And then you want to hire a CTO, it's 10 people, right? And so this, I think, maybe addresses even the AI question in some ways. And it's changing, right? So if I take a view for the last 15 years and look at how shallow the pyramid used to be to where it is today, you can see it becoming more and more balanced. And so when I think about like tech and growth investing, the end markets tend to be here in North America or in Europe. And so therefore, even if it's a startup that starts in India, I think Jishnu made the comment, given the end markets, the size of the end markets are here, you have to sort of say, we'll start in India if it gives you a cost advantage. And then really the go-to-market function happens to be in the US. What we have failed to see is, what is the sustainable advantage, other than the fact that your mode to getting to initial product market fit was a little bit lower, and therefore maybe you had some cost advantages. But then you come here and you don't have the same advantages. And in fact, you can make the argument that when an entrepreneur here starts a company, the first thing they maybe think of doing is starting up their R&D facility or the engineering facility in India. So the advantages, you have to really sort of unpack that.
Right.
So there are places where it's sort of interesting, like if you think about the low end of the market here in the SMB segment, where the go-to-market function is largely in-house and you don't have to have a very high-touch Salesforce. I think you can create a sustainable moat, and I see those types of opportunities in India, at least in the interim, call it the next 4 to 5 years, maybe 7 years. Maybe there is a growth opportunity with that lens in mind. But when you think about other things, it's hard to sort of, see that.
So I want to tie it back to the earlier panel and the question around governance and transparency and all of that, because I'm sure there is your point about the depth of the market itself translates to the expertise of the entrepreneur also. And so you can't throw, it's kind of like, a lot of the entrepreneurs in India sound like they are in a sugar high, thanks to SoftBank and Tiger and others who've just thrown a lot of, cheap capital at them. And that may have contributed to certain behaviors, and we'll come back to that. But, Asha, you're very active as an angel investor, and you're also very active sort of at a macro level looking at India, and you're obviously sponsoring this event, and you're particularly interested in seeing India's ascent in this vector. I know you're super excited, so give us a little bit of drivers that actually get you to the place where you are with this super optimistic point of view. So I know that you're probably closer to the Amitabh school of thought versus Professor Pradhan's school of thought, clearly, but tell us why you have such a view.
So for me, Sriram, so two things. One is I'm really happy that fiascos like Byju's have happened, because I do see it as a mini bursting of the bubble. In India, I think what that episode is going to teach a lot of our entrepreneurs and our VCs is to pick people who are much more solid than people who come in. And we had a bubble here too, which burst, and it happens everywhere. But the Indian bubble had not really burst in 2000 when it burst here. So so I think so for me, actually, it's a sign of positive sort of robustness of the startup ecosystem in India. It's also going to make the venture capitalists a little bit more cautious and wiser as they invest. The Tigers and the SoftBanks and so on, which have created this sugar high, are also now more reticent, thank God. But so while that's going on, and I piggyback on venture capitalists like yourselves, to invest in India, I also work very closely with IIT Kanpur in making sure that I work with some of the faculty there in promoting and working with a few founders who are likely to come up with disruptive new deep tech, theoretical breakthroughs that could influence the next generation of AI foundational models and so on. So that's on the startup side, and I'm doing that. But my other bucket of investment is an unusual one, and I've kind of pivoted from simply investing in good deep tech to recognizing that there is a space, there is a need in our sort of the worldview at a higher level. If you zoom up a little bit, there's a need right now to invest in Washington, D.C. So this is one thing that I've started doing, and I'm stumbling upon defense tech in the process, but more on that later. But right now, what I'm doing is I'm investing in various level of sort of, think tanks, research, people, even influencers in Washington, D.C., who could make a difference in the way in which America perceives India, and vice versa to some extent. So this is enabling an unusual level of people-to-people connect. It's also bringing certain level of trust. Now, is there an ROI for me in that? Of course, not right now. But my hope is that if this can enable simple things like more Indian companies going public on NASDAQ, or on simple things like, sort of American defense startups, for example, going to India for venture capital. I just met last week in New Delhi. I met American defense startups at some USIBC event that were raising funds in India, or partnering or looking to acquire and so on. So there is a whole different ecosystem that's emerging now that US and India recognize that it's critical. As Biden has said, it's critical that this relationship gets solidified on various fronts, not just the startup world.
So I know there was a question about the social investing. I know what you're doing, what you're describing at least, is not directly in the social sector, but what you're doing, as you rightly pointed out, is not tied to an ROI, because you're perhaps the best ambassador for the US-India dialogue that any of us in the room could have, because it's not all about dollars and cents. It's about raising the awareness of the opportunity, and so you're doing that. But there's something that you said there about IIT Kanpur that I want to pivot to Ami. I mean, you're running a large fund which is IP focused, and I know that you're also building relationships with many of the universities in India. As an IP shop, willing to underwrite innovation and entrepreneurial effort anchored on intellectual property, why do you see the Indian quality of IP interesting enough for you to spend your energies and your capital on?
Well, so just to back up a little, we're a hedge fund, right? So I'm a credit fund. As opposed to everyone in this room who's a VC funder, I'm a debt credit fund. And so we've deployed $3 billion, and I've never invested in India or China for that matter, because of the underlying collateral and the asset and the protection. And for me to be able to collect on my collateral is so difficult in the court systems in these respective countries. I recently raised a $2 billion fund, and I made part of it private equity. And the reason we're looking to go, I'm a deep tech and life science investor, and we have not found companies that go to that growth stage, where I'm talking Series C or later, that we've cared for to invest in India. So what I've decided to do is go to the source. And seeing how much money and R&D is going from the government in India, we have compiled 10 universities, large universities, and I'm putting $100 million into the technologies that are coming out of those universities and the intellectual property. So think of it as an intangible asset that we're investing in rather than a tangible, because of the issues we're having with the collateral. And so we decided, let's go and put where the R&D is going, where the research is coming out of, and let's really protect the intangible assets that are coming out of these universities and the startup ecosystems, that by the time they get to that Series B or C, hopefully my other end of my fund can also provide credit to that company as it starts to grow, because we're not seeing the ability to do it now. So that's one of the key reasons why we're doing this.
So this is very, very important, because I come from one such university, in the Indian Institute of Science,
Yes.
which is by far the best research oriented university that is capable of creating a lot of IP. However, if you did a broad swath sort of interview of the top 10, 15, 20 professors, they're more interested in publications versus filing patents, right? So is that a concern for you, or how do you see that changing?
Yeah, so we did a study, and we said that if you look at the top scientific publications in the world, and this is across the board, not just tech, but life science as well, genetics, AI, whatever, India had the third largest in the popular scientific magazines, but it was like number 100 in converting that technology into IP and patent protection. And so what we're trying to do is I'm trying to get to the source of these universities and take off the cost. Indian government is giving more research dollars to R&D to these universities, but it's not giving them the dollars to protect it. So the $100 million I'm trying to put in is to protect that R&D and the scientific research that Indian professors, Indian scientists are doing, and to create a protection not only in India, which is what most of them are doing at that, even at 5%, but it's less than 1% globally. And if we're going to create global companies out of India, you have to have global protection. Think of what Huawei, Oppo, every Chinese company has done, is that they've been IP-centric to be able to protect their home turf outside of their home country as well. And foreign country companies are using the Indian IP court systems to their advantage. Ericsson's, the Nokias are winning battles, other generics. But Indian companies are not using their own home court battles to win those battles. So hopefully we're trying to right that wrong in trying to start this as a first set of investments.
So obviously, Celesta, we know you, and you had us at hello, and so we're completely committed to your sort of strategy. But let me ask Jishnu, in areas specifically, some of the newer areas like artificial intelligence or robotics or automated robots type sectors, where it is still very nascent from an intellectual property standpoint, if there were key IP that were to come from one or more of the universities, which are either backed or quote unquote protected by an investor like a credit investor that seeks some collateral, like AMI, and you as a venture investor, how do you look at that? Is that good for you, or is that an impediment for you to capitalize on those companies? Or how do you think about it?
It's a good question. I think first, I can only see positive that an institutional eye, forgetting about the nature of the capital, an institutional eye has gone in to vet out some of these, IP. And so yeah, what I'm saying is that I think this fact that an institutional capital is backing IP can only be positive. What I would say is that what we are focusing on, like fundamentally, like it's an open question we are asking always internally in our firm, is fundamentally how many of these innovations which are coming out from universities are directly backable, even for an early stage VC fund like us. And at this point, we would say not much. And in fact, I can't think of probably couple of, in last 16 years, couple of cases where we have done that, where professor from IIT Bombay came out and we backed his innovation. But more or less, what we find in India is that including in new areas, talking about AI. Let's talk about AI because I'm sure it's everyone's mind. If we think of the AI stack, that we have infrastructure, we have toolings to kind of and models and toolings and then applications, we are seeing tons of activity, innovative activity in India in the application area, where we see that Indian developers, if you look at, like, they are very, 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 very good in kind of like making something out of resource constrained situations. For example, open source in AI over the last 1.5 years have taken AI to a totally different level, I would say. When OpenAI first came up 18 months ago or 2 years ago, from there to innovation that has happened, I would argue that open source has contributed probably as much or even more than the big tech companies combined. And Indians Indian developers are actually very good in using those innovations which is existing along the world and coming up every other day, to use those and come up with usable applications that we are getting to see always. So the amount of AI startups coming out of India is increasing at breakneck speed. I can't say that the same level of innovation is happening even in AI at the fundamental level. Like if you talk about, newer algorithm or newer transformer architecture, those things, there is a lot of research happening, but maybe they're still encapsulated in papers. Yeah. It is not yet translated into.
All right, so of all of you here, I think we probably are the only ones that make investments in hardware. You guys don't do anything in hardware. Do you see that changing given the government's push to actually have more hardware-related incentives and the product, PLIs and other things happening? Will that change your orientation towards hardware in India?
Very much, and actually, initially we did not do. Over the last 2-3 years, we have started.
I realize
doing hardware. So if you look at some sea changes are happening in India, right? Like around the hardware side. Last 18 months to 24 months, we have done probably 5 odd companies in manufacturing, in supply chain. Like we are seeing a lot of demands from US to US companies to diversify supply chain coming out of China, and seeing that what all things India can participate. Obviously, semiconductor is in everybody's mind. Semiconductor, I think there is a skill level that India is coming up, but there are a lot of things around semiconductor industry. For example, semiconductor testing, semiconductor assembly, packaging, where India is delivering today as we speak. There are light equipment manufacturing. India is extremely good in automotive manufacturing. There are a lot of things happening around car parts. There are a lot of things happening around specialty chemicals. So and this involves definitely hardware, special know-hows and all that. So it's happening.
Yeah. But I want to come back to this, but I'm going to open it up for some questions. So start thinking about your pithy short questions. But before that, Sandesh, you're a later stage investor, historically, especially in the US. As you look at the exit environment that is there in India, which is, scant, not that many M&A transactions have happened, very few IPOs. Does that concern you in terms of your time to money as your later stage investor? If you were to do that in India, do you have a different standard for your expectations and outcomes in India?
Not particularly. I would say, I think it's, if I just look at our own portfolio, we have probably a few, actually maybe 3 to 5 companies that possibly could list in India today.
Yep.
And there are pure tech companies.
Yep.
And there are not as many, comparables as such, but we're finding the appetite to be significantly larger.
Yep.
In fact, there is, few conversations that are happening that basically said, if it's an India domiciled company that's sort of, re-domiciled in the US for end markets, given the difficulty with which you can, the public markets here, everybody have followed, it's very hard to go public now, and that's unlikely to change anytime soon.
Right.
For these companies, the Indian stock market is not a bad place. As you know, that the market is fantastic. It's people are very, very bullish in India. So there are conversations where people want to actually reverse that move and potentially list in India, right? So I don't feel like that is a constraint for us.
Okay.
Look, I think we are a crossover investor. We do public and private, and we have very long duration. In a lot of cases, we're not looking to exit in a company when the company lists. Our public book is substantial at this point. We're probably one of the largest participants in the Indian stock market in India. So for us, I think we would just, as long as the duration is there and we think the company is doing well, it wouldn't matter for us much. But it doesn't drive our thesis.
You're particularly different relative to the others on the panel because your capital entirely comes from India. And so you may or may not want to comment on the question that I'm going to ask you, but I'll ask it anyways. You've had some challenges that I'm aware of in terms of being able to repatriate money out of India for you to be able to invest in the US, notwithstanding the fact that your main LP, the foundation, which is the Wipro Premiji Foundation, receives all of its capital from the dividends from Wipro, which is a global company, and they make money globally, but you have restrictions. How optimistic or hopeful, I should say, are you that this will cease to be a constraint for you to deploy domestic India capital globally?
Not to get into the nitty-gritty, because I think we could...
That's why I gave you an out. You may or may not want to answer.
Yeah, we could spend the whole afternoon talking about it. But I would say that, I'd say things are changing, is sort of the way I would put it. If I go back and look at 15 years ago to today, I would say there are certain things that have changed that make this a little bit easier, but it's not there yet, right? So very simple things, for instance, even if you're investing out of the US from Indian capital. So I'll give you an example. If that company has a presence in India, so the money is actually just coming right back to India to build out whatever infrastructure, tech, this, that, and the other, you can't do it.
Yep.
Right? So it's as simple as that. And it's I think the rule making has just not been open to understanding that. And even like when you move money in and out, the notion of, if you think about a cap table, if you think about a cap table from the US context, there's this notion of preferred equity that the investors own, and there's common equity that the employees own. There's no regulation that allows you to make that distinction in India. All equity is created equal, and there's historical reasons why that may be the case. But if you don't have that parlous in the private side, everything is treated equally. It's very difficult to understand to the regulator what this means, and sometimes it's viewed as debt, and so it's challenging, right? So yeah.
So maybe as a side digression, Amitabh, as much as all of us are either drinking or selling the same Kool-Aid that you have about the opportunity in India, we're all completely sold on that. But this is one area, if you recall, in the panel that we had in India as well, we talked about it. The recent circular that has come about with RBI, which really prevents the Indian institutional investors to participate in AIFs, it's almost like, it's a head scratcher, because here's on one side, the Indian government is making big investments in innovation and the startup ecosystem and all of that. On the other hand, the central bank is actually doing something completely orthogonal to that policy and preventing Indian institutions from investing in funds and vehicles to spur the same innovation the government is trying to do. So this almost seems like it's the left hand doesn't know what the right hand is doing, or maybe there's a lag. But this is one of those areas that I think behooves the government to sort of think about. So anyway, enough of my soapbox because I share your concerns for all the obvious reasons. So with that, let me just open it up for the audience for some questions, and then we can continue this conversation. Yeah, someone over there.
There was a recent report from Accenture where they said there'll be digital reinvention of work fundamentally. You'll see business processes, models, the ways of working changing completely. How do you see the landscape from the Indian worker perspective, that there will be new ways of working, new software development frameworks?
Are you asking in the context of AI, or are you?
In the context of AI,
Okay.
there will be digital reinvention of fundamentally business processes, models,
Okay.
the way we work.
This is not a
See
question
this-
specific to India, but you're asking a more general question.
General question, but more in the context of India, because Indian companies have been doing a lot of outsourcing
Got
work,
it.
right?
Yeah,
But
got it.
how does
Okay.
that landscape translate, and what does this mean in terms of investment opportunities?
So if I were to summarize it, it's the impact of change in the dynamics of all of these advanced technologies addressing work that otherwise may have been done by the Indian ecosystem. So let's come back to that. Yeah, Rajal. Yeah, right there behind you.
It was really quick. Thank you. Can I change the topic of your session and remove the word venture from it?
Yes, go ahead.
And just ask you about capital in India-US corridor, and also, I'm just looking at this study which CII did, which talked about $40 billion invested from India into US, and the top two sectors are pharmaceuticals and IT. So, question is, does it matter? Is it important part of the India-US relationship to have investment from India coming to US? And do you see that broad basing?
Yeah, so let's hold on to that. And one more question, Venk, and then we'll get the panelists to comment.
From my limited exposure, I see that most of the entrepreneurs in India tend to be very young. I don't see a lot of 40, 50-year-olds becoming entrepreneurs. And so first of all, is that an accurate observation? And if it is, why do you think that's the case, that 40, 50-year-olds in India are not becoming entrepreneurs?
Okay, all right, so let's hold on. So the first question was about the impact of advanced technologies. The second question was about capital and the sectors that we were interested in. And the third question was in age. So why don't you, Jishnu, why don't you go first? Pick any one of those three topics and.
Maybe I can talk about the first one.
Yeah, you're on mic. Yeah.
Oh, yeah, sure. First of all, impact of AI, so two things happening. The one thing that has happened over the last 18 to 24 months, the marketing and awareness of AI and the perception that AI is something that anybody can understand, because they are seeing that some call it software or something in front of them is creating an essay or writing a poem or so creating a video. So AI is real, and the marketing machine that big companies are investing and the dollars big companies are investing in, that has created a perception that every workflow we know within enterprise or otherwise also is going to change. It's only a question of time. I think there is truth to it, and it might manifest into different things. One is the total number of human kind of efforts or labor that is needed to get one job done will reduce drastically. One can argue whether it will get eliminated. In some cases, it might get eliminated. In other cases, the efficiency will increase. But it would also actually lead to different forms of work which human will do. For example, some of the IT service executives was telling me that after AI has happened from enterprises, they are getting work requests for AI ethics task force. They need, because as much as you want to automate everything, there still needs to be an oversight to understand, what is the liability exposure that is increased, or is AI doing the right things? Is it too biased or not? So there would be newer jobs that will come up, which humans will need to do. So it would be a very interesting equilibrium that we'll see between human and AI. And there might be some jobs elimination, but there will also be a lot of jobs creation. And that will probably, hope it addresses some of your question. But we'll see all kinds of things coming out. And I guess, all of us are learning every other day.
So before we get to Pranjal's question, Asha, I want, since you're very actively involved in sort of young entrepreneurs, and you've backed many of them, to Venk's question, do you see there is an age bias in terms of the investors in the US looking to invest only in younger entrepreneurs in India? Or why is it that, gray-haired people are not there?
I don't know if that was Venk's question, but I don't see that bias, Venk. I don't see foreign investors investing in only kind of or being biased towards younger founders. I don't see any of that. In fact, I sometimes get alarmed when I see too many Uncle G's who are running a company, or a nephew's company or a niece's company. That bothers me. But I think in general, the reason you see so many young people is because it's these people who are just leaving college and don't want to go into a 9-to-5 job. They have role models of Flipkart and Myntra and so on, and they want to be doing startups. And these days, there's enough capital even coming from families. I know a lot of young people who I have sponsored myself and brought them to the US, and I found that they've been funded by by a grandma or somebody in the family. So it's a very interesting dynamic. And
Sorry.
Yeah, I'd like to answer that. I think it's a matter of risk. I think the 40, 50-year-olds in India are not, they're not in a position to take that risk, right? And it's very difficult for them. And the young kids, hence why I go to the universities, the postdocs and the master students and the incubators that I'm funding. The reason I like that is that it's all risk. And they're willing to roll the dice. And they're willing to learn. But the issue is they don't have the 40, 50-year-old to manage them, right? That's the disconnect that I'm seeing is as you get to a later stage, you don't have the management infrastructure. Some of these companies fail because it's too much risk, too much that they did and couldn't get there and couldn't scale or couldn't grow. But the 40, 50-year-olds in India are not ready to take the risk. I don't know if they do in America either, maybe more here than in India, but definitely that generation is not there. And I think the 20-year-olds are all ready to take risk, and we're seeing it dramatically. And so we've decided to switch our funding to the younger set.
Well, I think
to help them.
If I may add to that, Venk, in our portfolio, we have 20% of our activities in India. I would say every one of our CEOs is under 32. Every one of them, right? Now, to my earlier panel question that I was asking about culture, my intention was not to imply that there was something fundamentally wrong with people that were, not as sophisticated in sort of, keeping your books right and sort of saying what you do and doing what you say. It's largely because these younger people have not gone through cycles of, failures. And so they're learning on your equity dollars. So as a consequence, many investors are in fact, one of our companies, we actually took it public last year. It's IdeaForge. And one of my partners actually said to our investment committee that the first year, our capital is going to be an MBA class for these guys. These guys were literally out of IIT Bombay. And in fact, the CEO stood up and said, Celesta was a great partner because they taught us how to do the basic things. So there is an inherent expectation that the investors, early stage investors, have to really train them on some best known methods and practices. And I think that we sort of take it for granted in the US, but in India, just given the nature of where they are in the cycle of evolution, we all may have to do that. But one last question on what Pranjal, you said about sectors, I guess, right? Or
Money.
India to US, whether it's only in pharmaceutical. Is that an issue? Sandesh, do you see that at all? Or in other words, are you naturally drawn to, given the fact that you are Indian capital, for the purpose of this question, just put that hat on and respond. Is there a reason why you're inherently interested in life sciences or in one of the other sectors?
India-US relationship cannot be one way in terms of capital flow, right? You've got to have two-way capital flow. Where do you see that?
Well, he's a classic example because all of his money is from India, and he's majority of his capital is going to US, isn't it?
That's right. I mean, like, I don't know how I can. I don't know of any other sizable investor other than us that does this. I think it's
Well, that goes
largely a
back to the
regulation
earlier
thing.
question that I was addressing to Amitabh, which is there are inherent constraints that the Indian government imposes, unwillingly perhaps, because in the technology sector, technology sectors doesn't know borders. So there's no reason why an Indian investor should be prohibited from investing in the value creation on a global level.
Yeah,
right?
maybe I'll answer it from, I agree with that. I think that, look, India has been capital constrained for a long period of time. And if you just think about use of capital that's available, the natural sort of spot is there's many more things to do within India for that. And so if you allow for, capital to be freely, to find its best sort of, return, and this is for Indian citizens in many ways, perhaps the fear is that it'll go outside of India, which makes it much more difficult to fund Indian activities in India that are probably, don't have the same ROI metrics. I think, so for the reasoning for that makes a lot of sense, but I think for certain types of investments and certain class of investor, and for the size of capital, it should be, I think that would make a lot of sense, and I think the current regulation doesn't really allow to make that distinction.
Yeah.
And so therefore, it's very hard for true large pools of capital to seek innovation globally in a way to affect the corridor in a way that can strengthen relationship is how I would sort of think about it.
All right. Well, thank you. With maybe just one last question and we're done. And because I'm getting the yank from Amit, the lady on the back. You.
India has a lot of communities with social disadvantage. And we have a lot of geographical disadvantages also. What is the plan that venture capital tries to fill that gap? Because it is concentrated to those urban areas where people are highly skilled, educated. How do we reach out that growth to other parts of India?
So maybe I'll take this on for the sake of time. Venture capitalists in general, have one purpose, and that purpose is to maximizing return. And they'll maximize return wherever that is. If it's in Ranchi, so be it. If it's in Bombay, so be it. So capital will always find its way to, its maximum potential. But there are other, we invest with Gates Foundation and a bunch of other social investors, and they may have other objectives. But the people on this table, I don't think, would be particularly interested in going after some social objectives. Wouldn't you agree?
Yes, but I would say that while the objective may not be social, the impact that we are having as venture capital is going in and powering the economy in a country like India. To give you an example, we took this company Delivery, which is the leading logistics provider, a technology-enabled logistics provider in India. We took it public in 2022. They have changed. They have created jobs, probably 500,000, somewhere between 500,000 to 1 million jobs of delivery people. Same is for Zomato, same is for Swiggy. All these things has a kind of, what is that, like a ripple effect in the economy in terms of job creation, in terms of changing livelihood. So indirectly, venture capital, I think, has enormous impact societally, even though social good is not a core objective with which we are deploying funds from a kind of shareholder perspective, but the impact can be very significant.
Yeah. So with that, I think, unfortunately, Professor Pradhan is not here. As you can see, the mere fact that all of us are sitting on this table and reasonably positive about, India and wanting to do more in India should be an indication that we're more in the camp of Amitabh and Ramesh. So we have great hopes, notwithstanding the challenges that exist. So thank you on behalf of the panelists. Thank you.